If you've had a loved one pass away recently and now you've got a lump sum in your bank account from that life insurance payout, today I'm going to be talking about some of the do's and don'ts with that payout. Hi, I'm Phil. Welcome to Skye Simplifies. So the first thing to think about is do not rush. Don't rush into any big major financial decisions. You've had a major life events where someone's passed away, and so just take a beat just to give yourself some time to grieve and manage kind of what you're going through at the moment. Some of the things that we think about are worth avoiding, especially just at the initial stages, is don't go and blow the money on a big trip overseas and thinking that's a way you're going to honor your loved ones. Just be really thoughtful, maybe give yourself a break before you do that, because an overseas trip may be really appropriate to do, and it may be something that your loved one would have loved to happen with that life insurance benefit, but making sure it's not a rash decision. The second mistake that we see is giving a lump sum amount of money to friends or family. Now, you may have that life insurance benefit that may be more money in your bank account than you've ever had in your whole entire life, and so there can be a lot of guilt around this money because it's been a benefit from a loved one passing. But just be careful not to gift that money without being really thoughtful around it fitting into your long-term financial plan. Some of the common things that we think about is really important to do is just think about, depending on how much the payout is. So you could be looking at $100,000 of a payout or over $1 million, but think about clearing any mortgage, any ongoing debt if you do have enough money. If you just have enough money to pay years worth of that mortgage, then maybe keep that aside for ongoing living expenses. So some of the first things to think about is depending on the amount of money that is in that payout. So some people may have a life insurance benefit worth $100,000, and some may have several $1 million. So it really does depend on your personal situation. But first thing to think about is your mortgage. So do you have enough money to clear your mortgage that you're living in? That's really important, just to give you the breathing space, not to have that monthly mortgage payment coming out every month. And the second thing is just your ongoing expenses. So if you do have ongoing expenses such as school fees or any major expenses ongoing, just think about setting that money aside to fund either a year or two or multiple years to cover that ongoing expenses. And then once you've done those two things, then think about creating a long-term financial plan. There is a life insurance benefit, which means that someone has set up a protection plan for you. So go and speak to a financial advisor about what you are going to do with the remaining amount. Do you want to think about keeping it in a cash account just for savings? Should you think about setting up an investment plan for yourself or any dependents? They're really important financial decisions that it's super important to give yourself time and give yourself a break. You're going through something that you've maybe never experienced before, so just take time to make really thoughtful financial decisions.